Well, hello traders and investors. I'm L.A. Little. This is your daily Neoclassical TA wrap. We take a look at these markets, doing it from a Neoclassical perspective. It means we're looking at supply and demand on the charts. We're using the information the charts give us. The charts are an embodiment of all known knowledge, both speculative and known, about what a stock, an index, a sector is going to do. There's clues on those charts. If everything is on the chart, and if you can figure out what's significant, then you can use that information to make trades with higher probabilities. It's not just about risk reward, it's about probabilities as well. I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. If you subscribe, you just reach up in the right-hand corner and hit the subscribe button there on YouTube. And if you do that, anytime I push public content, you'll get a notification. I pushed some content today here in NeoTA videos. If you want to check it out, it's 2 minutes or less trades. I'm going to try to push some trades out there that you can follow that are both educational and actionable. The one I did was the XLE today. And if you want, just pop over there and check that out. Let's look at these markets, see what happened today. We actually ended up with green. Over in Europe, a little bit of a bounce back after a down day. Same here, we were down, flipped back around. Dollar a little bit stronger again. Oil had a pretty good day. That trade video I'm talking about was on the XLE, which benefited from that oil spike. Gold, silver also trade up. The only ones down was the Russell, and the only one that gives a signal tonight is the Russell as well. So let's take a look at the markets here real quick. This is the S&P inside day. Inside days don't tell you much, and you can look at this any way you want, folks, and that's the way these usually work when you get to this point. And that is that if we take and look at this from an ABC perspective, let's restart it here with the different color. You had an A to a B here. That pushed back up to a C. Now you're trying to get the D, right? You're trying to push down, break underneath here, and extend. There's not a huge amount of difference between the price points, and so even the extension wouldn't get you that deep. The question, though, is that really what's going on, or do we have something else happening now? In other words, do we have the A, B, C, D going the other way, right, which would take us up higher? And so that's kind of the question that's out there in the traders' minds. And the answer isn't probably on this chart. It's elsewhere. If we look at the NASDAQ, you have basically the same thing happening here, just in a little different form, and that is because these have been stronger. You're actually range trading, right? You're inside this big range. If you can get over it, well, then something can happen. If you can't, well, then eventually you're going to seek the bottom of the range. NDX the same, got a range, although this one keeps trying to expand that range. It got up there, tested over it last week, tested, fell back. Well, today pops right back up there, sitting there at the highs, trying to move higher, but another inside day. Finally, if we move to the Russell, now the Russell's the only one giving any kind of a tell tonight because it isn't an inside day. It actually got underneath this price point, got under it, slightly less volume, flipped back over it, a little doji. That looks to me like this thing is going to try and push a little bit higher tomorrow. That would say those indexes, the other indexes, are going to probably do the same. The big resistance up here, the zone if you will, the range that it's in is from there to there. You're a little bit over the middle of the range, but it does look like this thing's going to try and work its way higher. Now that's what should happen. In Neoclassical, we're always asking what should, and we're understanding what those probabilities are. This is not a big probability tell, so I wouldn't put a lot of weight on it, but it's slightly in favor of a bounce, and that's the way it looks. The one thing I would point out, if you've ever paid attention to the Neoclassical thought, or if you're new to it, the ideal here is that you've got a range. You're in that range, you're still in the range, If you get over it, well, then you can do some damage. If you do under it, it's a little different story because underneath it is a swing point low. If you break that swing point low, and if we go back to the daily, if you break the swing point lows that exist over here, right, then you can get some real action to the downside. So the ideal here is you really want to see this thing hover and head higher before you get a break, because if you get a break, you're going to probably get a faster move to the downside. If we look overseas, the world markets, in particular in Europe, you actually had some downside yesterday off the top, so you get over, back under, less volume. That's really just an over-under. That's the same sort of read we just looked at on the Russell, so not high probability because you didn't get a bearish engulfing. I mean, this thing can go back up and test into that area. If you're wanting to short this particular market, the short is right there. That's the ideal entry spot on the short because you don't have to risk much if you're wrong, and you're shooting for something a lot farther down, which is back in this range. So that's the setup. The reward risk probabilities not that high, right? You don't have a great probability trade here. You have a good reward risk trade. You put them together, especially when you have both. That's when you can put more money on the table. The DAX looks the same, doing basically the same thing. There's not much else of a tell overseas. If we look at the gold market, and the gold market's been trying to move here lately, it's worth taking a peek at. And let me find it here. The GLD, well actually let's start with the silver, the precious metals markets. Silver is up to the top of the range, and this is the do or die point for it, just as we saw with the indexes last week. And so as we come back up there, right, that's where it's going to try to hold. If it can hold it, right, it'll try to drift it back down into the middle of this range. There's really two ranges almost equidistant, and so that's kind of the setup on silver. So silver at the decision point, if you will. Gold, a little bit different, but gold is up there pushing towards those highs as well. If you want to do ABCD structures here, it's a pretty good one if it takes off. You got the A to B, B to C is small. That's the way you want it in a very bullish move. If you take out that swing point high, you can get some action. If you pull over the weekly, you can see where that action would take you to, and that's the top of this swing point high. That's the breakdown bar on gold. That's where it's trying to get to. It's where it was trying to get to. The first leg up was unable to get there. Now the second leg is going to try, and we'll see how far that one gets. If we take and look at the ABCD structure here on the weekly, goes to there, back down to here, and then back up. So you can actually get over that price point if that works out. Not much else to say. I think tomorrow you're going to get a little bounce. I think if you look at the landscape, you have the political landscape as always anymore with Donald Trump in office. You got the meeting with China Thursday and Friday. The odds are is you won't see any news until sometime late Friday, and that probably is going to be when the markets make whatever kind of move they're going to make in front of the weekend. On the other front, you have the Fed minutes tomorrow. The Fed minutes are going to come out. I think the expectation is probably going to be about what happens. The only question mark is, are they starting to talk about reducing that balance sheet? If you have followed the Fed, which unfortunately we've all had to follow over the last few years, you've got a balance sheet that's swelled into trillions and trillions. The question is right now everything that's maturing out of here is just getting stuck right back in. And so this balance sheet, whatever the trillion mark is, I forget what the numbers are, whatever that size is, right? You get so many zeros out there, it doesn't make sense anymore. But whatever that size is being maintained. Question is some of these, as they mature, are we not going to put them back in? Are we not going to go buy some more securities? If that's true, the demand, right, is going to fall. If demand falls, what's going to happen to price? Price is going to go up. So the bond price, the yield is going to end up higher, and that's going to put pressure on this market, probably, if in fact that's what they reveal tomorrow. So let's see what that one ends up. That's it for tonight, and have yourself a great one. Check out the XLE video over on the TA Today site. Just pop in TA Today, go down to the visitors section, NeoTA, and 2 minutes or less. Take care. Good night.